They now are purporting that the true unemployment rate is 24.3%. It is made up of the truly unemployed. It also includes people who work part-time that would prefer to work full-time. And then finally, poverty wage jobs. So if you are employed and if you are working for full-time, but your wage is below the poverty line, then you are included. You have undoubtedly heard that the unemployment rate is 4.2%, sitting at or near record lows. However, what if I told you the true unemployment rate was actually 24.3%? Folks, I read a survey done by the Ludwig Institute for Shared Economic Prosperity. That is quite a mouthful. They have a particular way of looking at unemployment that is interesting to me, that I need to dig in further. Again, if you want to look it up, it is Ludwig Institute of Shared Economic Prosperity. They basically call BS on the 4.2% unemployment rate. They point out errors like if you work 1 hour a week, you're not included, things of that nature. They now are purporting that the true unemployment rate is 24.3%. It is made up of the truly unemployed. It also includes people who work part-time that would prefer to work full-time. And then finally, poverty wage jobs. So if you are employed and if you are working for full-time, but your wage is below the poverty line, then you are included in this true unemployment rate, which again sits at 24.3%. I have to do some more reading on this. I need to see what it's all about. I've not heard of this Ludwig Institute for Shared Economic Prosperity, but they certainly got my attention. Also, Peter Thiel is out there talking about a catastrophe coming to the U.S. real estate market. Basically, Peter is pointing out that the zoning laws create inelastic prices. This is something you and I have been talking about for a while. It is frankly why the crash bros and doomers are wrong. They do not understand inelastic or elastic. Again, it is a Econ 101 topic that most of them have missed. But basically, restrictive zoning laws create inelastic prices that force prices to only go up as population and wages grow, and it goes exponentially. It's kind of scary. David Bianco, a common voice on CNBC, is warning of another 20% correction coming to the stock market this summer. David says that 5,200 is possible. Not sure if you're following GameStop or Bitcoin, but it looks like GameStop is now following MicroStrategy. They have recently deployed $500 million and purchased 4,710 Bitcoin. Elon Musk is in the news talking about Trump's spending bill undermining the work of Doge, which I think is something we talked about yesterday. Again, the bill that has gone through the House is not in keeping with what I thought we were trying to do. It is Wednesday, so we got mortgage app data for the week. Total mortgage applications were down 1.2%, down 1.2%. Expected to be flat, but last week it was down 5.1%. If you break that down to purchase and refis were down 7%, and purchases were actually up 2%. I find it very interesting that purchase applications are actually up 18% year on year, which I think is interesting. Don't know if you guys know this, but it looks like President Trump wants Fannie and Freddie to go public. Looks like he wants Fannie and Freddie out of conservatorship, wants them to go public, wants to give them an official implicit guarantee versus an explicit guarantee. I stand by my call that if this happens, mortgage rates will go up and go up to potentially 8%. Yes, today rates are at or around 7. If this happens, I expect the spread to widen and the risk premium to rise. Hence, 8% mortgages are possible. We did get some Fed speak. We got Fed President Williams saying inflation expectations should return to target within several years. I don't know about you, but that does not give me the warm and fuzzies. That certainly feels like higher for longer. Fed President Barkin, businesses are still largely pulling out and sitting on the sidelines. Again, I don't even think it's businesses. I think it's consumers as well. There's no evidence that the drop in sentiment is actually affecting spending. This, folks, is the delta between soft and hard data. Soft data can be filled with emotions, where hard data is actually spending data. And then finally, people are waiting out policy. So again, very interesting to see, again, people pulling back. We did get some earnings this week, this morning and yesterday. AutoZone beat top line but missed bottom line. They had a gross margin hit. Macy's beat top line, bottom line, but slashed full year guidance. Abercrombie and Fitch beat top line and bottom line, but cut expectations. It is interesting to note that Abercrombie and Fitch had 8% year-on-year growth. Also, Abercrombie and Fitch estimated that they will have $50 million in costs given tariffs. Dick's Sporting Goods beat top line and bottom line. Sales comps were up 4.5%. They're being up sales. It is interesting that they're up year on year when we expected this to slow down. Box, a technology company, beat top line and bottom line, raised guidance. Okta beat top line and bottom line, but only maintained guidance. I dug into consumer confidence a little more because that was a big report this week. Hopes of a trade deal increased confidence 12 points, significant jump. Sentiment improved across age, income, and political affiliation, which I think is very important. And then finally, I want to congratulate Simon for joining school. Simon, thank you for doing that. Make sure you introduce yourself, get to level 1, level 2, and let's see what's going on. And then finally, I read this quote. I guess this quote's probably been around for a while, but I just saw it, so I thought I would share it with you. And that is a quote from a gentleman named Avicii, Avicii. And the quote goes, "One day you will leave this world behind. So remember." I thought that was very moving. It comes across on lots of my Instagram feeds these days, and I think it is interesting. I don't know if you guys are noticing a lag or anything, but my Wi-Fi, at least on my end, looks a little herky-jerky. Hopefully it is okay for you. I'm going to call it there, as I'm always afraid this thing might wipe out. Again, we will be back with the daily financial news tomorrow. Thank you all for being here. Hopefully this came out okay. Don't forget, Steadily is landlord insurance. They're already insuring a 4-plex for me and some houses. Just sent them a 10-plex, and we'll see how they do. Take care, everyone. Have a great day. Bye.